Okay, let's bring on board the management of Godrej Consumers, Aasif Malbari, CFO of the company, joining in with us to talk about the numbers. Mr. Malbari, good afternoon. Thank you so much for joining in with us. Can you start by talking about the overall demand trends that you're seeing in the quarter that has gone by, as well as in Q2, especially on the rural and urban front? What is the outlook there?
We had called out three key KPIs for us. One was about volume growth in India, volume growth in Indonesia, and profit growth at an overall consolidated level. We managed to tick all the three boxes in Q1. We had an 8% underlying volume growth in India, 7% underlying volume growth in Indonesia, and overall at a consolidated level, profits grew by 13%. So we were overall quite happy with the shape of our performance in Q1. I think what we saw in Q1 was towards the end of the quarter a bit of a green shoots in terms of demand trend. So there is early signs of the demand scenario improving. So we are hoping that we are able to kind of consolidate the volume growth as we go along in Q2 and thereafter.
Hi, good afternoon, Aasif. This is Sherlos for joining in the conversation. So let me just add to that question. Can we now expect a double-digit volume growth in FY25 for the company?
So aspiration for the India business is to get to a double-digit volume growth. And we in the last few quarters, we've been coming close to that. It definitely remains an aspiration for us to get into double-digit volume growth. I think what's also happening is that we are now kind of coming close to anniversarying onto the low commodity prices. And we've been losing, the revenue growths have been lower than the volume growth till this quarter. We're anticipating that from next quarter onwards, we should be seeing revenue growth ahead of the volume growth. So there will be a 2 to 3% kind of gain on price, which should start coming in with revenue growth, hence going up further.
Right. Aasif, this competition from HUL especially and other peers from the soaps category, given that there's a lower palm oil prices that one was seeing, though a slight bit of an increase now we're seeing in palm oil prices, but what would be the strategy for Godrej Consumers in terms of soaps as well as the pricing strategy there?
So soaps has been a strength in the last few years. We continue to kind of gain share in the soap business, and we're quite happy with the performance. The volume growth in soaps is lower than our company average because of the nature of the construct and the high penetration in soaps. But we remain focused on ensuring that at most the quality of soaps is at the highest priority. And hence that's something which remains as the first priority. Soap prices or palm oil prices actually over the last 3 to 4 months has seen a mild inflation. So we've seen palm oil complex actually go up by 10%. So there will be some price growth which will come in soap. But I think in the medium to long term, the category will get reshaped more towards body wash. Last quarter, we launched an interesting innovation on Synthol, which is a foam body wash. And there's the initial signs of it being received well by consumers.
Right. Let's talk about the EBITDA margin then. We've seen the company has posted an EBITDA margin of about 21% in the quarter gone by. Could we say that this sort of a margin level will be sustainable going ahead? Any outlook or any light that you can share on the margins going ahead?
So I think in terms of EBITDA margin, it's important to kind of see how it stacks up in the India business versus the international business. In India, we had a healthy EBITDA margin of 25%, and we would want to be in the range of 25 to 27%. That's the range in which we would want the margins to operate in, and we're quite confident using various levers in terms of cost saving. We should kind of sustain margins in these bands. As far as the international business goes, we believe that there is scope to improve the margin, and even if you see the results in this quarter, we've had significant improvement in the EBITDA margin in our overseas business. In the GOM business, which is the Africa business, our margins were single digit. Last 2 quarters, we've sustained margins at 14%. So there has been a significant improvement in the margins and the absolute profit, and in the other geographies also. So you will see a greater margin improvement in the international businesses, but at a consolidated level, you will see profit growth.
Okay, so 25 25 to 27% range is what you're talking about for the India business in terms of EBITDA margin. But let's talk about the latest foray of yours by the company in the pet care business. One, could you just talk to us about what is the strategy for foraying into the segment? This is I'm asking because you're seeing an increase in terms of a lot of players that are coming already into the segment. The competition is already rising there. So what was your strategy?
So pet care is a very interesting category. It's currently a reasonably sized category. It's 5,000 crore category, but still very, very nascent in India. This is a category which over the last decade has been growing at around 15 to 20%. And we estimate this category to sustain these kind of growths in the next decade. So it's a large opportunity, and we still believe it's still very, very nascent in India. We have, as a group, as a Godrej Group, a huge expertise because of our sister company, Godrej Agrovit, which is India's largest animal feed company. And hence, we have a lot of research, development, manufacturing capability in this segment. And hence, we see this as a very, very interesting entry.
Right, Aasif, talking about the same business, the pet care segment, if you could tell us what sort of a margin profile are you looking at for the segment?
So it's a reasonably profitable category overseas and in India. And hence, we would kind of see a good shape in terms of financials. The first initial few years will be an investment in terms of building the larger opportunity and in developing the market.
Okay, Aasif, thank you so much for joining in with us this afternoon on ET Now. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with all the stocks that have been buzzing in trade on the back of news flows and technicals after the break.
If you like this video, then like, share and subscribe to ET Now.